Alteryx's stock price is down by over 50% from its flying high peak back in mid-2020. This drop was caused by fears that the formerly incredibly fast-growing stock was no longer the one-of-a-kind hyper-growth company that could take over the world. At a time when the company was facing severe headwinds from the lockdown, this thesis made sense. But with the economy opening back up and Alteryx starting to pick up steam again in 2021, Alteryx may be set to explode back onto the growth investing scene. Hey everyone, and welcome to FinTech. In this video, I'm going to be going over Alteryx as a company, what they do, how they're performing, and how the stock price may react to their next few quarters of earnings. And make sure to watch to the end because I'm going to be talking about an interesting quirk in Alteryx's accounting that may mislead some investors into thinking Alteryx's growth is one thing when in fact it's something else entirely. 1 year ago, I was invested in Alteryx with a decent sized position at 6.5% of my portfolio. But after reporting earnings in July 2020, the stock dropped 30% in a single day. While it did recover temporarily, it went on to drop an additional 30% from then until now. At the time, I sold out of Alteryx because I thought the company would face a tough year ahead during the lockdown. But I also said that once Alteryx cleared the headwinds and started growing again, it would likely experience an equivalent swing in price the other direction. And now may be the time for the pendulum to swing the other way. So let's start off by doing a brief overview of what Alteryx actually does. Alteryx is a data analytics platform, but unlike many platforms out there, it's designed for non-technical people. In their investor presentation, Alteryx talks about how 60 billion hours are wasted performing repetitive tasks in spreadsheets like Microsoft Excel, doing the same data tasks over and over when they could be done way more efficiently with Alteryx. For many companies, people use 4 to 7 tools just to figure out what their data is telling them. But Alteryx simplifies everything into a single platform designed for the average employee. A key part of their growth is the kind of industrial revolution 2.0 that we are currently in the middle of. The digital revolution. While we use computers in our everyday lives, many companies are just now fully embracing the power that computers, the internet, and huge amounts of data can bring. And companies building the tools that let them use that power benefit hugely. Just look at Zoom over the past year enabling video calls, or Twilio for enabling texting technology, or heck, Amazon Web Services for hosting a pretty sizable chunk of the internet today. As companies generate more and more data from customer transactions, IoT devices, and start making decisions based on that data, technologies like Alteryx will become a necessity for any company that is going to compete in the digital age. Now, Alteryx is not the only product out there that does this, but it's probably the easiest to use for non-data scientists. While a data scientist might opt for the greater flexibility of a platform like Snowflake or the simplicity of Databricks, what is an accountant or a lawyer who wants to crunch some numbers going to do? Well, chances are they'll use Alteryx. And up until 2020, this made Alteryx indispensable for most companies. At the time, they were growing at 60% per year, signing on both new customers and selling more and more business to existing customers. The product they provided was so valuable that PwC, who used to do their accounting, actually dropped them as a client so that they could use the tool without a conflict of interest. PwC would rather pay for the product and lose a customer than not be allowed to use Alteryx's platform. That was the story in early 2020, and it was the reason I invested. Then the 2020 lockdown hit and everything changed at once. In July 2020, Alteryx reported that they only grew revenue 17% compared to the previous year. While that might be good for a normal company, this was a massive drop from the 60% growth that they'd been seeing up until that point. With the economic slowdown, companies just weren't willing to spend money on anything that wasn't absolutely necessary. And apparently, for many, that included Alteryx. But that drop, 60% growth to 17% growth, is actually a little misleading due to the way Alteryx calculates its revenue. You see, in 2019, Alteryx switched from one accounting standard, ASC 605, to another, ASC 606. This changed the way they reported their year-over-year growth. Rather than recognizing revenue from the subscriptions companies pay as the money comes in, they recognize around 35 to 40% of the value up front and then spread the rest over the length of the subscription. So for example, if they signed a $10,000 contract, $3,500 of that would show up as revenue in the first quarter, and the remaining $6,500 would be spread out over the remaining quarters of the contract. So what was happening a year before 2020? Well, companies were flush with cash, Alteryx was signing up people like crazy, so a big chunk of that recurring revenue was being recognized in 2019. That means a small drop in the number of new customers in 2020 made the drop in revenue look way more dramatic than the actual recurring revenue that Alteryx was receiving from its customers. This accounting basically makes it so if Alteryx is selling less than usual, they will look like they are doing worse than they actually are. On the flip side, if Alteryx is selling more, they will look like they are doing a lot better. So going into 2021, what was happening a year ago? Well, Alteryx was struggling to sign on new customers due to headwinds from the lockdown. So any growth they report this year may actually look better than it actually is. So let's take a look at Alteryx's latest numbers and see if their growth looks like it's picking up. In order to avoid the risk of overestimating or underestimating their growth, we're going to calculate our own revenue growth using their annual recurring revenue, which basically represents how much money they are actually making and bringing in each year. So right off the bat, the company is currently sitting at a market cap of $5.8 billion, off of revenues of $495 million in fiscal year 2020. For anyone who's watched my other videos on companies like, say, Snowflake, you'll know that this is a similar amount of revenue for a valuation that is less than 10% of Snowflake's valuation. And that's all driven by revenue growth rates. In Q1 2021, Alteryx grew their revenue to $119 million, an increase of 9% year over year. But if we instead look at their annual recurring revenue, they grew 27% year over year. Not great, but remember, this is still comparing to their last quarter before the lockdown hit. So next quarter will really be where we would expect to see revenue growth accelerate dramatically. Outside of revenue, the company looks pretty good. They have gross margins of 93% and a 120% dollar-based net expansion rate. This means that for every $1 a customer spends on their platform, that same customer will spend $1.20 next year. That's a good sign that customers like the product, though it is relatively lower than many of the dollar-based net expansion rates for other companies that I cover on this channel. So based solely on their reporting for this quarter, Alteryx clearly has not yet accelerated to the growth levels they had in 2019. Not even close. But whether or not the reacceleration occurs in the next few quarters, perhaps the more important question is, will Alteryx be a long-term winner in its space? After all, great valuations tend to come to great companies. Well, in their investor presentation, Alteryx presents several key drivers of their operating margin going forward, with the largest driver accounting for 80 to 85% of that coming from their shift to the cloud. While I think that this is absolutely an important area to focus on that will help the company improve margins and scale more effectively, it worries me that Alteryx will be too far behind other cloud-native data companies to compete beyond their current product offering. The fact that they need to shift to the cloud and they're not already there is kind of a problem. Right now, there are several other large companies competing in the cloud data space. Snowflake, Databricks, MuleSoft/Salesforce, and all of them already have a well-established cloud platform. Right now, Alteryx has an edge specifically in its usability for non-data scientists, but that may be in large part because these other companies simply haven't moved into that area yet. My worry is if Snowflake decides to use their larger market cap of $70 billion to leverage their way into copying Alteryx's product, their cloud-native abilities will dominate Alteryx's current offerings. On the flip side, if Alteryx wants to continue to grow their product offerings to include more and more cloud services, I wonder if they'll find the field already crowded by competitors with a 2-year head start on them. So in the short term, I think Alteryx absolutely has the potential to explode back into growth with a blowout quarter. They show their current total addressable market at $49 billion, dwarfing their fiscal year 2020 revenue of $500 million. So they still have a lot of room to grow to 10x their current size. It's really only once they achieve that growth and start to refocus on entering new markets that I worry they're going to struggle some in the longer term. Granted, most people would be very happy with a stock 10xing in price, so maybe it's a bit of a moot point. As for me personally, I have invested a small amount in Alteryx with the goal of holding for a short period before each of their earnings reports. The stock is already pretty cheap, so for myself, I'm less worried about the downside than I am about the stock simply going sideways for the foreseeable future. At a valuation of only 10 times their trailing revenue, even accelerating growth to a modest 40% increase year over year could have a positive impact on the price. And that's a gamble that I'm willing to take with a small 1% position on my portfolio. But let me know what you think of Alteryx and if you agree or disagree with my analysis. Don't forget to like and subscribe, and I'll see you next time.